myself. There's a puppy.
No, it's out there.
Mm-hmm. Hello. No, don't record. All right. Good morning, everyone. And Brian Koo and I thank you for joining us. And we're very honored to have Congressman Kilmer and so many of you on this morning with us. I know there's a lot of questions and a lot of business owners that are here that have lots of questions about what's going on. So if, Brian, it's okay with you, I'll let Congressman Kilmer take the floor.
Sounds great. Thanks, Colleen.
Thanks, Colleen and Brian, and good to see everybody. I think Brian and Colleen got to hear my overview of this legislation yesterday, as did Bruce Beckett, and I feel like making them go through this report twice might be a violation of the Geneva Conventions, but appreciate the opportunity to share an update with you, and really want to just shout out the work that they do, just helping try to recover our economy. For all the employers on the line too, I just want to say thank you. Having worked in economic development professionally, I always wanted elected officials to say thank you more to employers. So I know this has been a crummy year in a whole lot of ways, and appreciate those of you who are working to weather the storm. I'll say up front, over the last 9 months, I made a decision pretty near the beginning of this that if someone reached out to our office having lost a job or lost a business or lost a loved one, that we'd reach out to them directly, that I would personally reach out and hear their experience and figure out how to help. And the main thing I heard was just a real sense of pain and despair and challenge, and people urgently needed help. And so with that in mind, the passage of this relief bill a couple nights ago, I think, was welcome news. I will say up front, much like everything else that comes out of Washington, D.C., it's not perfect. There's things in it that I wish weren't, and there's things that aren't in it that I wish were. But I wanted to, I think net, it is a down payment on resources to help communities to beat back this virus, to distribute vaccines, to provide financial support to local employers and to families. There are some things that are absent. I did a call with some of our local government leaders and state government leaders yesterday. There is no direct aid to state and local governments. That had been in the HEROES Act that passed the House in May and in October. Obviously, I think many of us are concerned about seeing a round of public sector layoffs that could exacerbate and lengthen and prolong the recession. I can tell you in Tacoma, they're laying off firefighters right now. We did a call with some community college leaders last week. They've been told to prepare a budget for 15% budget cuts. And, each job lost means a family facing hurdles and paying rent or buying food, all due to something that's not their fault. So I want to recognize that there are things that aren't in this bill, including state and local assistance, that I think are actually important. And I think you will see Congress revisit in the new year. I'll also just say up front, the ink is still drying on this, and in fact, the bill hasn't been signed yet. But I did think it was worthwhile, and part of the reason we did a call with EDCs and chambers yesterday was to just walk through what's in it, so that as we head into the holidays, folks are aware of resources that are being made available to help weather this storm. I will give the caveat that it's been about 36 hours since this bill passed. So you may have questions where in some instances there may not be answers yet. They will be kind of subject to how the rulemaking is done on this. But if there's questions that you have that we don't know the answer to, I'll be sure my team is on the line. We'll mark it down and ensure we get something back to you. So with that said, let me talk about some of the things that were in the bill that I think are worth noting. First, it includes $120 billion for unemployment insurance. It includes bringing back the enhanced federal unemployment insurance bump. It's now at $300 per week, and that will continue through March the 14th of 2021. The bill also extends the pandemic unemployment assistance program. You all may remember that was to expand unemployment assistance to folks that may not fit into the traditional unemployment system. Self-employed workers, gig workers, others in kind of non-traditional employment. It also expands the pandemic emergency unemployment compensation program, which provides additional weeks of federally funded unemployment benefits to folks who've exhausted their regular state benefits. That's pretty important because that means about 14 million Americans won't lose those benefits at the end of this calendar year. On top of that, the bill increases the maximum number of weeks an individual may claim benefits through regular state unemployment, plus that pandemic unemployment, the pandemic emergency unemployment compensation program, or the pandemic unemployment assistance program to a total of 50 weeks.
I don't know who worked there, but
Sorry. Is that a question or just someone not muted? I guess I'll keep going. The bill also provides an extra benefit of $100 per week for certain workers who have both wage and self-employment income, but whose base unemployment benefit calculation doesn't take their self-employment into account. That was kind of a niche issue that came up following the CARES Act and put, unfortunately, a good chunk of people kind of in no man's land. The bill includes $166 billion for an additional round of economic impact payments. That is, payments of $600 for individuals making up to $75,000 per year, $1,200 for couples making up to $150,000 per year, as well as $600 payments for each child dependent. You may have heard the president say that he wanted to see that dollar figure be higher. I agree. In fact, the House bill included a higher number. There was pushback from the Senate on that. So we will see. The plan right now is to offer a bill under unanimous consent tomorrow to provide a $2,000 benefit rather than the $600 benefit. We will see if there's agreement to do that, but that's just breaking news on that front. There's also included, and I'm going to dive into some of the small business provisions, but just for folks' situational awareness, there's $25 billion for emergency rental assistance. We had issues related to affordable housing and homelessness before anyone had heard of COVID. Obviously, those challenges have been exacerbated, and so there is rental assistance. The idea here is to help people who may be at risk of eviction, but also to make sure landlords get paid, and that's the rationale behind that assistance. There's a funding for a new broadband deployment program to support the development of new broadband infrastructure in areas that aren't currently connected, with an emphasis on rural areas. Let me dive into the small business stuff. The bill has $325 billion set aside for small businesses. You've heard me say to this group before, small businesses aren't just the backbone of our economy, they're our star running back. If you look at how we make it out of recessions, it's our small businesses that are ones that are growing the jobs and racking up the tough yards and scoring the touchdowns on main streets all throughout this country. Unfortunately, because of this pandemic, a lot of them are getting tackled behind the line of scrimmage. And so I think part of the role of the federal government is to call some plays and do some blocking for our small businesses. So with that in mind, the bill includes another round. It reopens the Paycheck Protection Program. That has been a lifeline for more than 5 million small businesses and for their employees. It reopens the program through March the 31st of 2021. It provides $284 billion in funding for small businesses and for nonprofits. It allows businesses with less than 300 employees and revenue losses of at least 25% to apply for a second round of PPP funding. There were some concerns about businesses that kind of were left out in the first round. Women-owned businesses, minority-owned businesses, some of the micro businesses. I know Colleen, a call or two back, you raised the concerns about the very small businesses that may be unbanked or underbanked. And I think the kind of first come, first serve policy disproportionately benefited businesses that had pre-existing relationships with the lending institution. And so there are provisions in the bill to try to address that. There's a set aside for small business borrowers with 10 or fewer employees and businesses located in low to moderate income areas. So there's a set aside for them to be able to pursue loans of up to $250,000. There's a $15 billion set aside for initial PPP loans and $25 billion for second PPP loans. That's that small business set aside and areas that are low and moderate income. On top of that, there's a continued effort to ensure capital access for unbanked and underbanked businesses by establishing 2 set-asides for community lenders, $15 billion for small community banks, small credit unions, and small ag credit institutions, and then a separate $15 billion for mission-based community lenders like community development financial institutions. Think Craft 3 in our neck of the woods. The bill also expands access to the Paycheck Protection Program to additional sectors and industries, including 501c6 organizations. I know that is welcome news to our chambers and EDCs who were kind of left out of the first round. The bill also expands the ability to use PPP funds for business expenses that weren't covered for forgiveness under the first round. That includes personal protective equipment and adaptive investments to help small business owners comply with health and safety guidelines, operations expenditures for payments on software and other items for human resources and accounting needs, supplier costs that are essential to business operations, including perishable goods, property damage caused by public disturbances that aren't otherwise covered by insurance. And speaking of insurance, it covers some other types of insurance costs for employees, dental and vision and life that weren't covered under the first round of PPP. Under traditional PPP, there's the loan amount is at 2.5% of payroll. For restaurants, it's extended to 2.5 times payroll for traditional. For restaurants, it makes it 3.5 times payroll, just understanding that that industry's been hit harder. I have chatted with this group about a standalone bill that I had sponsored previously to streamline forgiveness of PPP loans under 150,000. And that's the bulk of these loans. Those loans, 150,000 or fewer, are 86% of total PPP loans. They're only 26% of the loan dollars. And so in an effort to reduce the paperwork for borrowers and for lenders, the bill requires borrowers with loans of up to 150,000 to submit just a one-page certification with only essential information to their lenders. There's a requirement to preserve documentation just in case there's an audit. But the idea here, the idea of this Paycheck Protection Program was not to create a bunch of work for businesses that are just trying to keep their head above water. I know, and I did a telephone town hall last night and got a question about this from Port Angeles. There's concern about some of the types of businesses that have been particularly hard hit by this: live venue operators, independent movie theaters, anything that involves sort of large groups of people sitting shoulder to shoulder for long periods of time. That industry, the live event industry, is experiencing upwards of 90% revenue lost, and unfortunately are probably going to be facing closures or pretty substantial restrictions, well into 2021. And so the bill provides some dedicated assistance to them in the form of grants. The first tranche, the first 14 days of that will be for those businesses that have seen a greater than 90% revenue lost. The second 2-week period will be for those with the 70% revenue loss or worse, and then it will be opened up to others. The bill also seeks to improve the SBA's Economic Injury Disaster Loan Program. It authorizes another $20 billion for emergency EIDL advances. It targets $10,000 EIDL advances to low-income communities. to ensure continuity and resiliency. It permits small businesses in low-income communities that received an EIDL advance to receive additional funds up to $10,000 and extends the covered period for emergency EIDL advances through December 31st of 2021. Finally, the bill includes some language to extend and expand the employee retention tax credit. That was part of the CARES Act, but it was pretty weak tea in the CARES Act. It's been enhanced pretty substantially so that the idea here I'm going to look at my sheet notes here because I want to give you a sense of this. If you are a employer that suffered a 20% loss year over year, looking back to 2019, then that employer can get 70% credit against employment taxes for retention and rehiring up to $10,000 per employee per quarter. That is a refundable credit. That is a pretty substantial change in relation to the CARES Act. It increases the credit from 50% of qualified wages to 70%. It expands eligibility so that it covers employers that have seen a 20% loss year over year or worse. Under the CARES Act, it was at 50% loss. In terms of the refundable credit, it had previously been limited to $10,000 per employee per year. Now it's $10,000 per employee per quarter. And that applies to employers of 500 or fewer. I think that's the big stuff. Let me pause there. I know you've got the SBA also probably want to present some information too, but I'm happy to answer any questions or take any thoughts or comments. And again, if we don't have an answer for you, we'll work to secure it and get back in touch with you. So let me pause there.
Great, thanks, Derek. And if you have a question for the congressman, please go ahead and post that in the chat, and we will call on you.
Actually, can I mention one other thing I should have included? The deal, and I want to just acknowledge and appreciate how much the folks on the north end of the peninsula have advocated for the Blackball Ferry. I should mention the bill that passed the other night also includes $2 billion in economic assistance to transportation-related businesses, motor coach and bus operators, school bus companies, here's the kicker, U.S. flag passenger vessel operators like passenger ferries, and other transportation service providers. So that's a new grant program that written as outlined in the CERTS Act, which I co-sponsored. That's a big deal, and I think opens up an opportunity for Blackball, hopefully, to get some help. And we will work with them to, as those dollars come available, make sure that we get a bite at that apple. So now I will pause.
All right, and I think a good idea to go to Mark next. Mark, thank you so much for being here. And then we can go to a myriad of some of the questions I've seen in the chat.
Hey, hi, Brian. Thank you for having me on. So I'm Mark Costello. I'm the Deputy Director at SBA's Seattle District Office, and really appreciate the chance to discuss the provisions of this package. I don't have a lot right now in terms of additional information beyond what the congressman shared. There were a couple of things that I thought were interesting, sort of related to programs that were already there. One of which was mention of the tax treatment in PPP. The Paycheck Protection Program, and specifically, I think there had been a lot of discussion over the last several weeks or even months regarding the deductibility of expenditures made with PPP funds. And my understanding is that the position of the IRS had been that those expenses were not in fact deductible. But my impression of this legislation is that it will in fact make those PPP expenditures tax deductible as well. And it seems to me that that's a pretty significant impact. And you know, obviously I don't want to take a position one way or another, but I think that that's sort of a an understated benefit that is going to help a lot of people. The other facet of the legislation that I thought was pretty outstanding, just from a administrative perspective, and one that will reduce a lot of burden for PPP borrowers, as well as those lending institutions that have participated in the program, is the decoupling of the EIDL advance arrangement with the PPP. And for those who maybe have experienced this or had a PPP loan as well as an EIDL advance up until now, you might recall that the EIDL advance amount itself was to be deducted from the forgiveness of your PPP loan. So the legislation now will, quote, decouple that. In other words, that sort of leftover balance will no longer exist. I'm not quite sure what the mechanics are going to be there, but it's just going to save, I think, people a lot of heartburn. There would have been probably a lot of remaining $1,000 loans that needed to be programmed out over 2 years, and just kind of a hassle for lenders and borrowers alike. So I think those are great things that are just going to make things a little bit less burdensome going forward. The other feature of the legislation that I think is definitely worth mentioning, and I think one of the probably really impactful pieces of earlier legislation was the what we basically were calling the debt payment program. I believe it was section 1112 of the CARES Act. And essentially what that did was provided for 6 months of payments on existing SBA indebtedness, whether we were talking about 7A loans, 504 loans, or micro loans. The 1112 provision allowed or provided for those payments to be actually made directly to the lending institutions on behalf of the small business borrowers by SBA. That is going to be started as a result of this legislation. I think there are going to be a few more nuances to the program, but it looks to me as if there's going to be an opportunity for those existing SBA borrowers to receive those kinds of direct payments on their loans from SBA for anywhere between 3 and maybe up to as many as 8 months going forward, and to include new SBA borrowers. So in other words, if somebody is going out looking to perhaps acquire a facility or buy a business or start a business in January or February, the first 6 months and they're going to use an SBA loan for that to capitalize that or fund it, the first 6 months of those payments will be covered under this piece of the legislation. So I just think those are promising developments and things that maybe you won't quite hear as much about they're maybe not as flashy, but I know they made a significant impact as a result of the earlier CARES Act. So the other thing I just wanted to kind of point out, I know my colleague Melanie Norton is on the call as well. She's our regional communications director. And as SBA goes about the process of you know, developing and finalizing the regulations that will back the legislation and allow us to implement these programs. What we saw previously was that there was a lot of information being pushed out, and sometimes it was a little bit erratic in terms of how it came out and when it came out. And I know that everybody has a desire to get the most accurate and timely information on these kinds of resources as possible. So with that in mind, I just wanted to encourage folks to look to the SBA website as probably what you might call a trusted source of information. There may be stuff out there with folks opining about what things are going to look like that would come out before SBA might push something out onto our website. But I just want to make sure that think of that as kind of a way to make sure that you're getting the most accurate information about these programs. So sba.gov/coronavirus is going to get you to whatever it is that SBA has published regarding these programs. Additionally, if you sign up, you can sign up for updates, and it's a very easy process. Go to sba.gov/updates, and all you have to do is put in your email address, and when new information comes out, whether it's regarding regulations or our famous FAQs or interim final rules. We have all these different acronyms that we use, but it all kind of plays into the important background information that you guys are going to want to have, that our lenders are going to want to have, and that we're going to want to be sharing with you. And we want to make sure we're doing it the right way, and we're doing it with accuracy and in a way that you can trust. So take advantage of those resources. Going forward, we anticipate getting more clarity around the SBA specific programs, and we look forward actually to being able to push out a series of educational types of webinars where we're going to be able to dig into for example, the new iteration of the PPP, as well as continue to talk about the PPP forgiveness process, because I know that didn't go away for those of you that already have PPP loans out there, and you're trying to figure out, hey, what's the best way to do this for us going forward. I think the fact, as Congressman Kilmer mentioned, that they were able to increase the streamlined threshold under PPP forgiveness from up to 150,000 is fantastic. From my perspective, again, that's going to alleviate a lot of burden and anxiety and administrative challenges that just really weren't going to be necessary. And I'm personally really happy that now 87%, fully 87% of that 5.4 million or something like that borrowers under the first PPP are going to be able to take advantage of that. So keep us in mind. If you guys want to reach out to our office directly or me directly on any of this as it goes forward and continues to kind of unfold, it's very easy. Email protocol. It's mark.costello at sba.gov, and I'd be more than happy to talk and tell you guys what I know, and we can stay in touch and make sure everybody has, again, the most accurate and timely information on all of this important material. So again, thank you, Brian and Colleen. Thank you, Congressman Kilmer, for the opportunity.
All right, found my unmute. Thank you so much, Mark. And yeah, appreciate you mentioning Melanie as well as pushing out timely and relevant information. In addition to Congressman Kilmer, think about the SBA staff over the holidays, as they'll be tirelessly working on all the things that we're anxiously awaiting. We do have a number of questions that have been in the chat. So we'll start with Darlene's asking if the $600 is for each person or only for wage earners. My understanding is the former.
Yeah, it's it's the same eligibility as was under the CARES Act. So you need to have a Social Security number. Individuals earning up to 75,000, couples earning up to 150,000 will receive the full amount, and then after that, the checks phase out as income goes up. There is included in the bill was a Marco Rubio bill where if some members of a family have a Social Security number, but some do not, if they have an ITIN, so-called mixed status families, they would now be eligible for the checks as well. So that's the only sort of change in eligibility, but it's based on income, not on earning wage.
Great, thank you. Lena asks, and this is a great question, obviously unemployment benefit funds are being depleted in each state. Is there any allocation set aside to replenish those funds so as not to pass that burden on to the business owners?
So the bill includes a total of $120 billion for unemployment. States will have some flexibility with regard to how to use those funds. So you've got states like Virginia have already announced that they would use any federal dollars to try to pay down the state's unemployment trust fund deficit. I don't know that our state has made an explicit announcement yet regarding the use of the funds, but if we hear something on that front, we'll circle back with Brian and Colleen and get information out to you.
Yeah, Representative Kilmer, this is Michael McQuay. Thank you so much for joining us today. It's pretty huge for those of us that are trying to wrap our heads around this whole thing. Going back to the unemployment thing, and I know obviously you're with the feds and not the governor, and I know that he's made some announcement already that he's going to try to fix this. But I want to put it in perspective for a little guy like me with a couple restaurants. My tax liability that I just got my new notice for unemployment tax liability for next year and beyond, it's going to go up over 400% based on what I'm looking at right now, which equates to about $20,000+ a year over the next 3 years. So I think it's really important that we find a solution with help from the federal government to not put the burden on those of us small businesses that are just completely hammered. Thank you.
I agree. I mean, I obviously businesses are having a hard enough time right now. The prospect of a very substantial tax increase is, obviously not welcome right now. So, this is historically when we see these, very substantial dips, that's where the federal government steps in. I will tell you, Mike, though, that if I had my druthers, the federal government would provide a little bit more. Actually, it would provide a lot more transparency and certainty to you and other employers. What you've seen so far is Congress sort of doing these sort of short-term unemployment extensions and short-term assistance to states for unemployment. That's not dissimilar to what you saw in 2008 when Congress voted 13 separate times to provide federal support to unemployment. But every time you hit a cliff, The states face a period of uncertainty and have this conversation around whether they need to increase taxes on employers to pay for continued unemployment benefits. People who are unemployed are also kind of left in a lurch because they don't know whether their benefits will continue. You're already seeing that dynamic play out again here, where it's kind of like the scene from Jaws where Brody says, we're going to need a bigger boat. You know, you had the CARES Act, which provided unemployment benefit. Now you have this legislation provides unemployment benefit. Does anyone think we are going to be entirely out of the woods come March? I don't think we're going to. And so there's legislation that I put forward that would provide ongoing help to states and to folks who are unemployed, and that the federal support would basically draw down as circumstances on the ground get better, right? And so you just provide a sense of certainty at the front end. When I worked in economic development professionally, my observation is what employers want from government, perhaps more than anything else, is just a sense of trust and predictability. And that's out the window right now. And I think that's something that Congress could address by, you know, just building in some automatic triggers to this, rather than having you worrying about your tax bill at a time where we should just be worrying about keeping you in business.
Yeah, great
Maybe
question.
that was more than you wanted, but that was, I feel pretty strongly about this. This is a dumb way to do it, so.
We have another related question. Dale asks, are you eligible for the employee retention credit if you receive PPP funds?
Kind of. So the bill provides that employers who receive PPP funds may still qualify with respect to wages that aren't paid with forgiven PPP proceeds. So that may require some careful accounting. So I would just encourage folks to work closely with your accountant if you're looking at trying to, what is not allowed is double dipping. And that's laid out explicitly in the bill.
Great, thanks, Derek. Shelley from the Jefferson County Historical Society, good morning, Shelley, asks the grants, or excuse me, the set aside, the 15 million for museums and cultural institutions, in what form will those be distributed? And I'm guessing we don't know yet.
So it depends what Shelley's asking about. So there's included in the eligibility for the live venue entities is cultural institutions, which again also kind of presume their revenue is based on people coming, right? And so obviously they're going to be, to use a technical term, a bit hosed for a while. So that is what was included in the bill is 15 billion in grants for live venue operators, cultural institutions, independent movie theaters, and it's in the form of a grant that will run through the SBA. In terms of how those dollars will pay out, this is what I mentioned in terms of those which have had the 90% reduction in revenue will get the first bite at the apple. Then those with a 70% reduction or more in revenue get the second bite at the apple. And then those that are worse off than that get the remaining bite at the apple. In terms of the eligibility, I think that will probably be part of rulemaking by SBA. And I know we have someone on the line from the SBA, so I may invite them to speak to that. Also the other night, and just to provide a little bit of clarity, two things happened on 2 nights ago. One, a COVID relief bill passed, and then on top of that, the annual appropriations bill passed to fund everything that the federal government does over the remaining course of the fiscal year. So that means, you know, funding for things like the National Endowment for the Arts and Humanities was included in that funding bill. You know, funding for Puget Sound recovery was included in that funding bill, for salmon recovery, a lot of the programs that support Native American tribes, the Indian Health Service and the Bureau of Indian Affairs, all of that was funded through those programs, through that bill. That is obviously not COVID relief, but like part of the job of Congress is to fund the government. And in the absence of this bill being signed into law, we would see a government shutdown. I know there's some confusion about that because I've seen some on social media saying, you know, why is there funding for this, that, or the other thing in what's supposed to be a COVID relief bill? There's not, is the short answer. There is a COVID relief bill, and then there's the annual funding bill that includes, among other things, funding for the State Department and the foreign assistance programs that run through the State Department. Those are things that were included in the president's budget. I saw his remarks last night saying, why is funding for this in a COVID relief bill? The short answer is it's not. And I'm not sure if he's just ill-informed or intentionally misleading, but it's beside the point. I just want folks to understand there's two things that happened. Yes, they happened simultaneously in one bill that was at the request of Mitch McConnell in the Senate, just to ease, from a process standpoint, the process in the Senate. So that, Shelley, may be more information than you wanted, but I wanted to just provide that context too, since I know that there were some questions about that.
Thank you. We next have a question from Art Green, owner of Anytime Fitness. Art?
Yeah, good morning. Thanks everyone for showing. I just typed it up, but really for gyms, my wife and I own Anytime Fitness. Our doors have been closed pre-Thanksgiving. Not sure when they'll open. So for the PPP, meaning the 20% loss over last year is going to be very easy with zero revenue coming in. Right. So do we qualify for the 3.5% like restaurants do?
I don't know that. I'll ask my team to double back. I know that, and part of this was a negotiation because there was a separate bill that was included in the House bill specifically targeted at restaurants. I know your industry's also been very hard hit. There's standalone legislation that's also targeted at your industry. I'm a sponsor of that bill, but I'll have to double back with you, Art. And I know my team's on the line. Maybe if you can put in the chat your contact information, we can double back with you.
Okay, thank you.
You bet. And I'm sorry that you're dealing with that. I know that's crummy. And
yeah,
I've talked with a lot of folks who are in your industry, and I know this has been a dumpster fire every year. That's a technical term.
To follow up with that, Sean Johnson had a question.
Yeah, hi there. I just have a question regarding this next round of PPP. Do we know the funding window when you go back to? So in February of 2019, we own a fitness facility too. So we've been really hard hit, which we just renovated an old building in 2019 and moved into at the beginning of 2020. And then we have a cafe too. So we have a restaurant in the front, which we opened in February right before the shutdown happened. And those new employees, which essentially doubled our staff, were never included in the original PPP because we couldn't go back far enough to show history of employment. However, we've kept everyone on through this entire pandemic and paid them even at a loss to us. And I'm hopeful that this next PPP, we can actually include our restaurant employees in the PPP application. Do you know how far back you're looking and how that's being calculated?
I may invite our phone a friend, Mark from the SBA, if he wants to chime in on this. I would expect that the SBA will issue guidance with regard to the next round of the PPP that was just authorized. I know that the bill is explicit about some components of it in terms of there was an expansion in terms of what eligible costs would be. There were some guardrails that were put into the legislation with regard to the kind of second draw loans. And as I mentioned, the sort of second time PPP borrowers will be eligible to borrow an amount that's equal to 2.5 times their average monthly payroll. And the exception is for accommodation and food service industries that will be called out by the SBA. Those will be eligible for that 3.5 times the average monthly payroll because they've been harder hit. But let me, in terms of some of those specifics, let me see if Mark has a respond to that? The answer may be we don't know yet until the SBA promulgates the rules.
Yeah, I don't have anything additional on that, but that, you know, just on the surface, it seems like that these would be at least the restaurant component, if not the fitness component, would be the kinds of industries that would be allowed the 3.5 times monthly payroll. So I would hope to see that.
Chair Allen has a question.
Yeah, I might not have wrote it correctly, Derek. So the two bills are separate, right? The omnibus bill versus the COVID stimulus bill. They're separate bills. They were voted on separately, correct? And then now the president is challenging it. So if the Congress responds to his challenge, are you still keeping those two bills separate?
That's complicated. So leave it to you, Chairman, to ask a highly technical question. But the short answer is kind of. There were two, you are correct, there were two votes. One was on the COVID relief bill plus some of the appropriations bills. To fund government, there's 12 appropriations bills. I want to say like 7 of them were included in the bill along with the COVID relief bill, plus tax extenders, which are some of the kind of tax components that we've talked about, the employee retention tax credit. There were some other sort of very targeted things. You know, the craft breweries and distilleries had some tax relief previously that was extended through that. That's all in one bill. Then there was a separate bill that funded, I want to say, 4 or 5 of the other appropriations bills all in one big bill. Defense was in there, Homeland Security, military, construction, and veterans, all in one sort of separate bill. Those got 2 separate votes. In terms of what happens if the president vetoes it, you know, I will tell you both of the bills passed with very broad bipartisan support. I mean, I think one of the bills got 40 no votes, and one of them I think got like 70 or 80 no votes. But out of 435, that's overwhelming support. So you may see if the president vetoes it, and who knows? I mean, I've stopped trying to predict what President Trump will do. I think they passed with a veto-proof majority. There would likely be an effort to override that veto. This is playing with live rounds, though, because if it does get vetoed, we have a government shutdown right after Christmas.
Okay, so a follow-up. If he sits on it, you have to wait 10 days before it gets approved. How does that work in all the issues being affected by the deadlines that are happening in this calendar year that are relevant to the all the provisions that both bills are trying to address?
If he does not sign this bill or these 2 bills, you are correct. It has a lot of implications. So, for example, the expiring unemployment benefits will expire. All of these provisions that we've talked about to support small businesses will not be extended or provided. And for those components that are just simply part of the annual appropriations process, there's funding for the government through just after Christmas, and then after that, there would be a government shutdown. So if he sits on the bill, there'd be a government shutdown. So happy holidays.
Fuck you, Kilmer.
Oh, I'm really sorry about that. I have a question about, generally speaking, with PPP loans. There are many folks that have had to lay off employees and would like to use a PPP loan again, especially restaurant owners. But previously there was a provision that said you had to you had to have your full amount of employees brought back on by the end of your covered period. If there's still a government shutdown going on, it doesn't make sense for those business owners to bring back all of their employees if they can only really actively support, a third of them or something. So how will that be handled? And will that a PPP loan still be able to help those business owners if it doesn't make sense for them to bring back all of their employees?
Yeah, I'll invite Mark to chime in here too. My recollection of what's in the bill is it lays out what's allowed, what the business is allowed to basically stipulate what the covered period is, whether it's between 8 and 24 weeks. But Mark, feel free to chime in if I missed something there.
Yeah, that's exactly right, Congressman. And I would expect that, so one of the features of the forgiveness process as it evolved is this idea of a safe harbor for business owners. And so if we were to continue in a kind of a challenged environment in terms of the ability of certain industries to re-engage fully, and it was as a result of different kinds of government mandates and government edicts, that was a safe harbor, quote unquote, whereby a business could say, hey, we weren't able to bring back all of our employees because of these government mandates. And they could use that as the basis for still achieving full forgiveness of those loans, even though they didn't necessarily bring back their employees or their head count to the level that it was prior to the pandemic. So I expect that will continue to exist.
So I have a quick follow-up question related to that. And I've read what is available regarding the PPP loan at this point. And I know there's a lot more information that's going to be forthcoming, Mark, but my biggest concern is, normally this time of year we're highly seasonal. I've got 24 to 28 employees. Right now I've got 8, and all we're doing is takeout and delivery. Normally by March, April, I'm ramping up to start in June having well over 70 employees. That's a normal year for me. It's kind of like the same thing that happened with the last PPP loan. On March 16th, we got shut down. It took about till June to get any of the PPP funding. All the banks had to ramp up and figure it out. And I know that process will go much faster this time because the lending institutions have the works in place, have the infrastructure. If this goes past March or even later, and we never get, once again, above 50% allowed occupancy, and the start date is the day of funding, and you got to understand this is all has to do with just uncertainty, kind of like what Derek mentioned earlier, Representative Kilmer. Gosh dang it, we need some certainty. And like Colleen says, I don't want to jump in the PPP boat again and borrow a bunch of money, and I never get to the numbers that I'm normally at in the summertime because of government mandate. It just doesn't make sense for that clock to start the day we get the loan. Is what I'm getting at. Can you address that?
Yeah. Thanks, Michael. The only thing I can think that is a consideration is what Congressman Kilmer mentioned with regard to the covered period option. In other words, that you can take it out to 24 weeks, not necessarily just 8 weeks. So you would have up to 24 weeks to utilize the funds. And you could do that even if, for whatever reason, and let's hope that's not the case, you're still not able to return to a full level of employment.
Okay, I see Chair Allen had another follow-up question.
Thank you. So did the new language, Derek, change the eligibility criteria for the PPP loans? I thought I saw a number in there that changed it to 300. Is that correct?
The second round is eligibility is businesses with less than 300 employees and revenue losses of at least 25%.
Okay, that's the new thresholds now for this second round. Okay, all right,
correct.
Got it.
So I know Derek needs to jump to yet another call. Just want to extend our gratitude again, Congressman, for you being here this morning to answer questions. Also, your tireless work for the benefit of the North Olympic Peninsula, and all the work you're doing and what's coming around the bend too. Appreciate the heads up with that.
You bet. Let me just say in closing, there's I see that there may be some other questions in the chat that we didn't get to. If Brian, if you or Colleen want to just copy them and send them to Evan from my team, we can try to chase down answers for folks and just feed them back to you. In some instances, the short answer may be, we don't know yet, because there's obviously the rules may need to be promulgated for some of this stuff. Let me end the way I started, which is just with gratitude to our economic development leaders and to all of you who are employers. It really, really matters. You know, I grew up in PA. Part of the reason I'm in this job is because I want to see more opportunity, more economic opportunity for folks, regardless of what zip code they live in. And so that's really the focus in our office. I've tried to, as questions have come up, just giving you the facts, and you can agree or disagree with the facts, but these are the facts as we see them. I am hopeful that this will get signed into law. It's not a perfect bill, but in the midst of divided government, having Democrats and Republicans come together and actually get help to folks who urgently need it, I think is pretty important. And more is going to need to happen. That's not just Derek Kilmer saying that. Most economists agree that come the new year, we're going to need to see more support to people. Final thing I'll just mention, and I mention this a lot, we got to combat this virus. The ability for our economy to bounce back is going to depend on us beating back this virus. So I know all of us are trying to do our part in that regard and continuing the social distancing and masking and all of those things that help us crush this virus. The vaccine will help too, and there's funding in this bill that passed the other night to speed up the vaccine distribution so that we can get it to people, as many people as possible, as soon as possible. And I'll also just mention, I know this virus is really contagious, but it's not the only thing that is. So is kindness, and so is caring about your community. And that's something that we do really well on the Olympic Peninsula. And I want to just say thank you for that. And thanks to Mark and the SBA for their leadership too. And apologies, I got to go dash on to a 9 o'clock.
So thank you so much, Congressman Kilmer. And we will have this recorded on Choose Column First. And so you can go there to see the full question and answer session if you'd like. So thank you so much. Merry Christmas, everyone. And enjoy some days off. And we'll try to get you some answers. Thank you.
Thank you.
Thanks, Colleen.
Thank you.